What's up everybody? Tom here with another video. We've seen a lot of people starting to call for 10 and 15% corrections. This is not the first time this has happened in the market, and in today's discussion, we'll be talking about whether this is a head and shoulders pattern of concern on the Nasdaq, our S&P 500 thoughts, our crypto discussion right now, gold, Apple, Tesla, and more. The VIX has spiked well above 20 and it seems to be holding there. This is a time that we need to be pretty nimble. Stay tuned guys, this will be a good one. Lots to discuss. Alright everybody, and welcome back to our market recap for the markets closed 30th of November 2021. And when we take a look at a heat map here, you'll notice there wasn't that many things safe. What went up came down in exactly the same fashion. The only difference was Apple was up 3.16%. and Tesla held at a 0.68%. We'll take a look at those throughout today's video. Everything else was red. You can see it was all sectors pretty much down across the board. And I feel like if it wasn't for Apple being up, possibly we might have even broken through some really key supports. But let's discuss what happened. So we had a little bit of a ramp in the morning, that traditional hour of power where Wall Street takes advantage of the retail trader. Everyone felt pretty bullish. And then all of a sudden they dump it on everyone. They basically smash those markets straight back down. The VIX is still above 20, so we have to be relatively nimble in markets right now and fast with our trades if you're doing that. And one thing we were talking in our live session today, and if you like live sessions, remember to subscribe to the channel as we do them for the market closes every single day of the week. And basically what we're taking a look at here is the idea of swing trading. So really, do you want to swing trade in these types of conditions? The answer would be no. You would really want to focus more on the day trade, scalp, and investment opportunities until the markets settle and give you that nice, normal technical flow. Anyway, everything settled. They all ended up hovering around the same zone and they closed on some key supports we'll be taking a look at throughout the video today. There's some amazing levels that we really need to focus in on. When we're looking at sectors, again, nothing really was safe in the sectors. Everything was down. XLC here, wow, 3.17%. Utilities, sometimes considered a bit of a defensive market, that was down 2.92%. And also another defensive one, XLP, consumer staples, down 2.56%. So it was really actually more of the growth stocks that lost the least. That is the technology and the consumer discretionary, but it was all down. Let's get into the technical analysis because there's a lot to cover today, including some options discussion for what's ahead for the S&P 500. And when we talk about this VIX, the volatility index, we know that whenever it's above 20, we need to change our strategy. We need to make sure that we're, again, maybe steering clear a little bit more from swing, day trading, scalping, and looking for an investment opportunity until things settle back down. When the VIX goes back under 20, that becomes a very technical market. Right now, it is a news-driven market. So one thing I want to mention when we talk about all of this stuff is that we have a whole bunch of mixed signals coming out from the media. Some people are discussing inflation, of course, with the Fed coming out and say transitory is now gone, guys. It's no longer a word in Powell's vocabulary. It's funny, he gets reelected and now all of a sudden it's not transitory. So inflation, the story of 2021. Do we think this is a big long-term concern for the market? I've argued many times I don't believe it is. However, people are concerned about it. Then we're going to start discussing tax. Then we're going to start discussing, of course, the idea of interest rate hikes. How many will there be from the Fed next year? All of this discussion is coming. And at the same time, people are still discussing this Omicron thing. And realistically, when we're talking about all of these bits of news, you don't know where to look. And this is what confuses you. You've got to cut through this stuff. And in many ways, technical analysis helps us really see what's important. And we'll take a look at what's important in the market right now, whether you're scared or whether you should still be optimistic. And in general, optimism pays. It is true. Sometimes you need to be a little bit scared, okay? Sometimes we need to be scared, guys. But do we need to be scared yet? And I've argued not at this stage. Let's take a look here through the DXY. What are we seeing? We are, of course, seeing a pullback here. This is due to the fact that if we have a little bit of a slowdown in the economy, what's more likely to occur? They're not going to raise rates. The dollar index does do very well off rate raises. And what we actually saw was if you had a Bloomberg terminal, you'd notice that most people were pricing in 2 rate hikes for 2022 or even 3 rate hikes. So quite a lot. That is starting to come back down to 2 as the more likely scenario. And we've seen the dollar index fall here. It's still hovering around support. If we go to a daily, You'll notice it just kind of hit the daily 20 moving average, a very good moving average. We love the 20 EMA, and it's bounced off that. We'll come back to this one as we get more information. Let's go on to a bit of a boring chart here, which is gold. It is just continuing to stuff us around. We haven't changed any levels here from yesterday, but let's take a look at the scenario now. It doesn't look positive. I mean, I don't know if I would short it, but I certainly wouldn't be going, oh, I love this level right now. We have weakness coming through on gold, and gold rallied right up to the resistance we spoke about. And let's take a look at the 2 hour, and then came straight back down. Now, this could be a false break to the downside. And if it is, if we do then break up here, believe me when I say it'll be even stronger. False breaks can be sometimes seen as a positive. Remember that idea of Wyckoff. It's that max pain theory. We don't know yet. I wouldn't be doing anything. But when you're talking about confidence, you're talking about finding key zones, understanding the left-hand side is something we really work on here on the channel, and something that I work on a lot with people that we mentor. It's a huge deal. It takes a long time to get really good at it, but it's something that I think a lot of people don't do. In fact, I would say that 95% of traders out there really don't understand the left-hand side when they're looking at charts. They just go pattern, 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 TP, 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 stop loss here. They don't really think about what the market's telling them. So here we have the 1810 zone. We come up, we hit it, we sell straight off. It didn't get through. If it got through, we would have been massive smiley face if we were trading gold and silver, because at that point, you're talking about a nice turnaround story. We don't have that yet. We'll continue to follow this as much as possible on the charts. Let's move over to oil, another one that's taken a big dive. Yesterday, we talked about this resistance, and we said, okay, we breached that. We've created a nice base formation. That's what a trader does. They wait for the confirmation and then they move ahead with the trade. That's the fantastic thing about it. We're still in the green zone, and how we derive the green zone is we really derive it from previous resistances and previous resistances here. And we say, okay, it's a point of interest. We need a turnaround story now. Are we seeing it? Let's go down to the 15-minute chart and talk about what's currently happening. So on the 15-minute chart, we're starting to see it. We're starting to kind of get to that area of interest. You'll notice we have a little bit of a lightning bolt occurring. Maybe it will breach through. Now, 15-minute chart is not, of course, a daily. It's not anything else other than that. And I really think this is a super important zone, but only for a very small trader. They're going to look at it and say, okay, I'm going to look at this. I'm looking then for a bit of a movement up. I'm going to watch it on the 15-minute. Remember, if you use 15-minute conversion or completion of charts, you won't have as much strike rate percentage as you will like an hour or a 4 hour. But this is the first stage of recovery potentially here for oil. Then we go up to the 1 hour. We think about where we're at. Okay, 20 moving average here. You'll notice it's holding it down a little bit. That's going to be an important zone to break out. It's happening at the same time. We start to look at the 4 hour, and then we bring it down. We say, okay, well, previous support, we'd love to break above that, wouldn't we? Imagine if we saw something like this. Lightning bolt on the higher time frame. This is what we talk about scaling. If you like this area, you're looking for turnaround stories, and as each time frame locks in, you get more confident. The algos will also get more confident in Wall Street's algos, and they will start to add to the position. The reason why markets move like they do is often was people piling in, and a lot of Wall Street's money or the big hedge funds money piles in as the trade is rewarded for doing the right thing. It's a big thing we discuss here. So US oil's in the zone. No current turnaround other than very small time frames. Not enough to go off for most people. Let's talk about Tesla. We've got a high, we've got a low, we've got an open, we've got a close. Pretty boring. Long leg doji, right around the right area. Look, we were calling for a bit more of a move up here. Of course, we hoped that once that closure occurred, that Tesla would be able to move towards the 1200 level. We'll just go down to the 2 hour to explain that a little bit more. Let's check that out. There it is. So resistance break. We move up. Nice little close actually here. And I hope that the market rebounds. It looks like it will rebound. For the next session. And if that does occur, we're moving potentially up to this 1200 level. So Tesla held amazingly well in the previous day of trade. And I think that's just due to strong technical and a lot of people buying into it. Another one that held well is something we've focused on a lot recently, which has been Apple. Apple just bucked the trend. If this thing wasn't up, so many markets would have been down a lot more. We need to always remember Apple is $2.7 trillion market cap. It's a massive market cap, and it's come back to the resistance point. Now we look at the daily and we go, ooh, okay. That's a little bit rejection-y over here, but it's coming through strongly. This was our original target, 165 by Christmas. It did it in 4 days. It's going back up there. Is it getting extended away in height? It's very likely it is. I think we're going to need to start looking at options here on this one to find out what occurs, and we'll do that in the next video, but we're at resistance coming into the closure, and we'll skip over this one today and come back to it for the next session. IWM, definitely the elephant in the room, obviously continues to weaken. We had that resistance set up for yesterday, closed through there. We moved towards filling the gap, and we of course have a bit more smiley face. This is a terrible close for it. Do I think that it can turn around? I mean, yeah, sure. It basically is confirmed that it false broke now. Now, that doesn't mean it won't turn around. An index will turn around and usually go towards the bull side. But we just need to face the facts. We broke out up here. We had quite a few days of bullishness. It was good. We expected it to come back down to this zone, the green zone that I've left on the charts to show you everybody. Then we get this news information that really rattles this market, and the volume goes up, and really what happens here is we don't get the turnaround story. It's almost identical to gold. I detailed previous video. Go watch it if you haven't. Go to the middle of the video and check out how we don't get stuck in these situations as much from a trader's perspective. And we don't have a turnaround here. 1 hour chart at one point was looking okay. It was starting to recover into the close during the live stream, but that previous support, the long leg doji here, was too much resistance and it sold off. Day traders will be looking for a breach above 220. They'll be looking for this level to get snapped. If we do breach and snap that, then there's a good chance that IWM is starting to look like it's a recovery. But at this stage, it's just weak. I mean, what do we do? Let's move over to another market. Nasdaq, one of the strongest indices out there, if not the strongest. Left shoulder, head, right shoulder. This is what a lot of people will be putting in the comments today. Do I see a head and shoulders? The answer is yes, a potential head and shoulders. You don't just short it here because you think that it's a head and shoulders, it's going to happen. Remember, head and shoulders are only confirmed when they get through that neckline, and they get their name because, of course, our heads poke out above our shoulders, ideally. Otherwise, you'd be a bit of a hunchback of Notre Dame. We don't want to be that. So that's the idea behind it. Generally, you want the right shoulder to be smaller, and that shows really strong weakness, as in people are very keen to get into the short. But guys, remember, it isn't about trying to short the market so much. Shorting is cool, and you can certainly make money from it, but it is difficult. And I think a lot of you have worked that out from now. It hasn't been an easy short for a long time. But when the short is there, it's there. Now let's talk about where we're at. So where are we at now in terms of our trend line and all these types of things? Well, we'll go through. We've got this trend line here, been using that. And we've got, of course, the top end trend line that if we actually use the full ascending channel, we actually breached a little bit of that recently. So we actually got into it and kind of smashed it around. Now we are at a resistance. Let's say this thing starts completing. What's our case scenarios? Well, our case scenarios is the potential to come down and hit this bottom end and then move back up. That would be a decent correction. Let's just measure that out for everybody. So we're talking about 6.7. And if we took the head and shoulders idea and said, okay, well, this is a pattern, let's go with that, where would that push towards? It would push towards pretty much around that area. Because remember, by the time it breaks, we'd be around here. So it'd be pretty similar. But I also like the idea of just really focusing in on what has worked in the past and one of the things we know about the market. And the market loves the 20 moving average. So let's say it did weaken. The 20 moving average, this red line here, while it's breached it, it has always closed the weekly thus far around or at it or above it. And that's showing us that the market still has that bullish tendency. Remember, when it gets underneath here, we expect the 50 exponential to happen. If we get a closure, we expect weakness. We haven't had that so far. We've always seen strength come through on this market. QQQ is the same thing, very similar setup. Head and shoulders, many people will look at. But how I like to look at it is more on the smaller time frame. So let's use the futures market to figure this out. And that is, we'll use the 2-hour chart. So the 2-hour chart so far, we knew this was resistance yesterday. We detailed it very heavily. It went out, it actually crunched above early, and then dominated all the retail traders, which is just such a typical thing for Wall Street to do. Wait for close confirmation, guys. The CC, we need the close confirmation so we don't get hit in the first hour of power when Wall Street take advantage of retail traders. It truly is very likely they will do these types of things. Then we have the wick purchasing on the left-hand side. We've seen purchasing near the close of the day here. And as soon as the market closed, it went straight back up and hit the little resistance. And if we actually go down to the 15-minute chart, which is something we did during the live stream, we were talking about this idea of a little bit of resistance come down, little bit of resistance breach, and then it's trying to make that little bit movement high. So this will be something that a lot of traders will look at in the morning. What will happen? Will we get a bit of a pullback? Again, bullish hammer, something like that. Bit of a false break to the downside, then reversal towards strength. Will we breach underneath this zone and begin the head and shoulders? That'll be a very interesting one should it happen. We don't know yet. You've got to be fast, nimble, and it's a literally hour by hour situation because it's news driven. And when it's news driven, I'm not talking about the inflation stuff. Don't worry about that. We're talking probably more about this Omicron thing. And that looks, frankly, I'm not a medical expert. I don't want to get into it too much, but it doesn't look as bad as it could be, okay? That's the information we have right now. I'm not going to give it any more time than that, but remember, it is hour by hour in terms of news. And when you have news-driven market, you've got this fear coming into it, technicals can go out the side other than the smaller time frames. So we've got to be very, very careful. We've got to focus on the big time frames and the small time frames, not the middle as much, if that makes some sense. So US 100 stuck within the range. We've got a nice range. We've analyzed it correctly, I believe, and well done to everybody out there. Hopefully you guys are starting to see it this way. Let's move over to the SPY. So the SPY closes just underneath the 50 exponential moving average. This is the blue line here. A pretty nice closure for it. We've got the trend line. We've got that movement up in the markets at this stage. And when we're starting to look at this, we can then breach it down to something like a 4 hour, etc., and start to say, well, how bad does this market look? Is it okay? You'll notice it's trading around 456, and this will become important when we look at options in a second. So 456, a lot of people are talking about 450 being a huge level. Let's go over to the weekly here. Where is that weekly 20? Just at 448. So let's say the market came down and hit this zone. What's bounced before? The 20 moving average. Where is the 20 moving average? We're incredibly close to it. Should we breach down and come to the 20 moving average, do we think there'll be a lot of puts there, or potentially there'll be some buyers there? There could be a put wall, hey? So let's take a look at that right now. Let's go through. So here are the options expiration for the 3rd of December. There's not too many outliers, but you'll notice there's a bit at 450 and actually a decent amount, a little bit of an outlier here around 455. So very similar price that we're at right now. So remember, the idea of these options walls are that sometimes you get outlier points, e.g. this one over here, where the market is in, if the market's coming down to that, do we think the market wants to close underneath this level before expiry? No, they don't want to pay out these options. Remember, 70% of options expire worthless. Sometimes you get these things called put walls. So this week doesn't become overly clear. Let's move over to the 10th. A little bit more puts sitting all around that 450, 455 area. Not a huge amount, but again, there are some there. Then we scroll closer to Christmas. Oh, okay. So here we get some more puts on the most important expiration, the 3rd week of the month. And we get a whole bunch sitting at 450, and then there's some underneath that. We also have a little bit of calls above this zone. So if we start to see this rise as we come down, and this is why you should check it daily, what do you think would happen is if this thing went off the scale and there was a huge amount of 450 puts? It would create that 450 put wall, therefore creating a support right around where the 20 exponential moving average is. This is what traders look for. It's a day-by-day thing, but when you spot all of these things convoluting into a zone you love so much, and then you see the turnaround story on the smaller time frames, you just go, Eureka, I've done the right thing and I've been patient. And the reality is trading can be incredibly boring. You've got to be patient. Sometimes, well, somebody said to me once, the best trades you take, Tom, are the trades you don't take. And I was like, you're insane. But it's sometimes true. If you have experienced that, put the comments down below. Help the community using your experience. Have you ever said, oh, wow, I'm so glad that I waited for this. I used scaling. I used some other concept to make sure that I didn't get involved in that trade. Think about it and think about how you can perfect your trading and perfect your investing journey through possibly just being a little bit more cautious. And while that takes more dedication, more discipline, and it's boring, don't get me wrong, it can help you out. Let's take a look at the SPX. This is still just the S&P 500. I've just got the pivots here. So we're entering, again, that 50 previous resistance here at the 45.40 zone. We've got the 4,500 just underneath that. What is the 4,500? Oh, lo and behold, the blue line here, the central pivot monthly. So again, very good support there. Let's have a look over to the weekly. Bang, right on it. Another thing people will do with TA is they're trying to stack as much information in their favor. They'll use something like a fib. We've hit the 38.2 fib. For many people in a run, 38.2 fib is a big, strong buy zone. Between the 38.2 and the 50 fib, I've detailed it many times. I love this one. A lot of people really like 61.8 fibs. I kind of find like it's losing a bit of momentum if it comes back down there. Of course, the golden ratio down here, but there's good support there. So maybe it could come down, wick through, come back. We're looking now for the signs of a turnaround, for the signs of this sell-off dissipating and potential Christmas rally. We asked the community today whether there'll be a Christmas rally. You guys were split 50-50 down the middle. No one was loving it. The only thing people were loving was the crypto market. So let's move over here to FBTC. We've seen Ethereum break through to a new high here. Look at the weekly. We've been talking about how Ethereum is stronger than Bitcoin for some time now due to this ratio. There was the recovery plan. There it goes, daily through. Not quite at an all-time, like a peak that's happened in multiple years, but certainly some strong breakout occurring here. And this is signaling that, of course, Ethereum is looking a little bit better. We look at Ethereum on the charts, it looks better on the charts too. It's breached and it's looking for those new highs. We're looking towards that 5,000, 5,200 plus area. This is almost an all-time high. And at the same time, we move over to Bitcoin. Well, Bitcoin's just kind of struggling around, doing its little dance. And it's dancing okay, but it certainly isn't as strong as Ethereum at this stage. You'll notice here we have the supports. We obviously expected it to come down here. We do have that downward trend line that's kind of respecting to a degree. This is the one that comes through all of these previous peaks. And we've talked about how, there we go. We move it to logarithmic, see how it makes more sense now. There's the log. And when we select the log, it seems to be do better for fast moving markets. So of course, logarithmic is probably preferred here. We've breached, we're consolidating around here. Until we get above 60, we're not feeling uber bullish about Bitcoin from a TA perspective, but I hope it can do so. And we certainly don't want it underneath our trend line anymore. It needs to hover around here, and ideally it moves to the resistance, smashes that thing through, and then we can resume some nice bullish trends here on the Bitcoin markets. Ethereum looking relatively strong anyway. Let's move over to the calendar. Really, it's all about now non-farm payrolls. Remember, Friday, 8:30 a.m. New York time, we have the non-farm payroll employment change. Everyone will be looking at this number to find out how the US economy is going, and that might create some instability. But I want to remind everybody, out of all of the non-farm payroll results, it's like 90% of them have ended up being a positive for the market, okay, since the pandemic. It's a very high stat. Now, I pulled that one out. I don't know exactly what it is, but I know it's very, very high. In fact, there may only be 2 that were negative and the rest have been mostly green. So just remember, news generally helps the trend. Keep that in your mind. That's the story for today. If you enjoyed today's video, please remember to subscribe, smash that like button, guys, helping us out a lot. And thank you for your support on our road to 100K. We're going to get there one day, and that's thanks to you guys sharing the video and being just awesome out there. We've got the best community around, and that's thanks to each and every one of you. Bye for now.